We've really started to enter an era here where, to your point, AI can analyze, underwrite, execute transactions autonomously. And I'm curious, like, as you think about the role of blockchain and what it can play, making that world that we're moving into auditable, secure, trustworthy, how you think about the convergence of those two technologies and how important, frankly, blockchain is to making it work.
Yeah, I know I've spent a fair amount of time on underwriting, but I'm going to come back to it because I think it's another great example, which is right now, and it gets back to some of the regulation questions. If you were to use AI in loan underwriting, that would be considered problematic from a regulatory perspective. It would be considered problematic probably from a buyer perspective because, AI can hallucinate. And at the same time, a black box approach doesn't work. People need to understand exactly what happened. And so I think by basically using a combination of blockchain and AI technology and saying, I'm going to take the process that the AI went through and put that on a blockchain in an immutable way such that I can always come back to that, I think is a great example of a use case and one that would probably be helpful from not only a secondary market or buying and selling of the loan perspective, but also from a regulatory perspective, where people need to be confident that your AI model is not doing anything to bias against a certain protected class or otherwise. And so I do see that as a very big opportunity. I think another area that's interesting is just if you think about more, but on the payment side of blockchain, another place where besides tokenization, there's been a lot of momentum on the payment side, when you think about who's going to be doing work and what needing to get paid for work in the AI world, there will be agents that need to do that. And so if you think about an agent that is transacting and is moving money on behalf of itself, right? Not necessarily on behalf of someone else. How do you KYC an agent? How do you tell an agent what to do programmably with money? I mean, programmable money is stablecoin. So I think that you're going to need a new financial services paradigm for not only the KYC and compliance environment, but also for the money movement and programmable money environment. And I think stablecoin and blockchain go together well with AI in that context.
And I'm curious, you talking about a world where, again, we're going to see a litany of AI agents, right? I think the latest figure I saw on this is that there's something like 250 million agents already out there today. And I think it would be a safe assumption to assume that we're going to have multiple agents per like human being on this planet. And
Right.
so I think we're going to rapidly get to, the billions sort of range of AI agents. When you think about just what's going to be required from an infrastructure perspective to be able to enable all of that from a blockchain perspective, like where do you see things like potentially breaking, just given not only the volume of AI agents that I would predict we're going to have in the next 2 to 3 years, but then also given the fact that those agents are going to transact, way more than any humans ever transacts in a given day, in a given month, right? These are agents that, don't get tired, can transact thousands of times in a second. So just curious how you see like this volume metric increase in transaction activity and where that potentially needs to be resolved from an infrastructure perspective in blockchain to enable that.
Yeah, I think it's a great point because we're not quite, and that's where if we want blockchain to disrupt some of the incumbents, particularly in payments, I think this is a really valuable point. And one of the problems that we have is that there's this almost Cambrian explosion of L1s and stable coins. And so you're not seeing as much migration to winners and kingmaking as you might expect. And so as AI evolves, something that I could imagine happening if that issue isn't addressed is that people that are focused on agentic payments may say, well, there's no natural L1 or stablecoin or set of stablecoins to focus on. So we're going to use, traditional rails because, and I think that would be suboptimal for all the programmatic money reasons I mentioned. I think also from a compliance and KYC perspective. But at the same time, I think that is one of the bigger problems in the space today is if you want to build on blockchain, that sounds simple, but then what are you building on? And which L1, which ecosystem, and new ones keep forming, right? And they have legitimate reasons and they have legitimate projects, but that is definitely something that if I was running one of the agentic commerce ecosystems or projects, I would be concerned about.
Yeah, and the way we look at this as, from a data problem, from a scale perspective, and I describe this to various folks that we speak with on there's billions of permutations of networks, protocols, and assets that you need to understand in order to like really enable all of this. And that level of visibility and intelligence is very difficult to like get your arms wrapped around, and it's what we've spent a lot of our time focusing on, because we think it's important ultimately. And we may get to a place 2 years down the road where we, to your point, we start to see consolidation around a certain set of L1s, a certain set of like protocols, a certain number of stablecoins, as an example. But I think between here and there, what we're experiencing right now is really a Cambrian explosion. It's a very good term you used across all three of those vectors. It's one really exciting, but it also creates to the point we're making here, like a very big and complicated data and intelligence problem as it relates to payments and frankly just enabling agentic commerce at a broader scale. Michael, I don't know if you want to talk a little bit about you just had an announcement recently on a new AI-powered DSCR loan platform that you all launched, and curious if you want to tell the audience a little bit about that. It seems like a really apropos initiative to maybe talk about here, given that we're talking about this intersection of AI and capital markets in a way that's like very relevant.
Yeah, well, DSCR sounds super obscure. Probably no one listening knows what that is, but essentially it stands for debt service covenant ratio. And what it really means is like commercial real estate rather than personal real estate. And so commercial real estate, you're evaluating the property's ability to service the debt. Whereas in a personal real estate, you're evaluating a person's income and ability to service the debt. And so this is kind of a chassis from which we can enter a much broader space, right? We've focused a lot on consumer mortgage, but there's a whole world of single family rental and investment property. And then even beyond that, of just commercial real estate more broadly, think gas stations and dental offices, anything that is not residential real estate, which also includes multifamily properties that are being put out for rent, right? So anything that's not a single family residence, that's a huge market. And I think when you think about Figure and what we're trying to do, going back to our RWA conversation and back to the opportunity, all of these markets should be more standardized. There's a lot, if you think about a loan against a gas station versus in one city versus a loan against a gas station in another city, like they're very similar. There's a very small set of metrics that you would need to know whether you wanted to buy that loan or trade that loan, but they could be done totally differently with physical loan documents and having no certainty or perfection of lien and being super opaque to the buyer. And we want to standardize every asset class that exists, right? So starting in private credit, but moving on even into places like equities and commodities. So this is a big opportunity.